Wednesday, Federal Reserve Chair Jerome Powell testified before the House Financial Services Committee. What was discussed? Why should we care? What do we need to know as crypto investors? Hello, I'm Crypto Casey, and in this video, we are going to explore important things Jerome Powell discussed with Congress in his testimony that we need to be aware of in order to prepare for this crazy year ahead. Let's hit it. Please be sure to check out our sponsors, Morales Money, CoinLedger, and Tangent Wallet. Know when to buy, sell, and hold crypto with the Moneyline tool we've been using for several months now to monitor bullish and bearish trends in the market, as well as find altcoin gems before they pump with Morales Money, which is a whopping 75% off for a limited time using the link below. Get your crypto taxes done quickly and easily in 3 simple steps with CoinLedger, a platform we can use for free to see an overview of our gains, losses, as well as download the tax forms we need to file ourselves, upload to TurboTax, or hand off to our accountant. Like Lorenzo CPA, my accountant, you can book a free call with in the links below, and invest in your very own cold storage hardware wallet like Tangent Wallet. It's the size of a credit card, multi-currency, multi-chain, and it's by far the easiest crypto wallet to set up and use on the market right now, and it's extremely affordable. So scroll down and use links below to access the correct and official sites, as well as redeem any special offers they have for us. Sweet. Overall, mostly not great news from the Federal Reserve, which over time will prove bullish for Bitcoin. 1. FAIT, an acronym that stands for Flexible Average Inflation Targeting, was a 2019 proposal that went into effect in 2020, and it was basically the Fed's 4-year game plan to maintain an average of 2% inflation. And when Jerome Powell was asked about it by Congress, he pretty much said, well, we created FAIT because inflation was low. So it was a way to anchor inflation expectations at 2% to keep it from falling under 2%. Then the pandemic came along and changed that 2% level significantly. So yeah, we will review this framework at the end of this year, and it will take us about a whole nother year to do the review. What the heck does that mean? Translation. When the Fed said they wanted to target a 2% inflation rate with a flexible mindset under the FAIT framework, they literally only said that because inflation was too low. Now that inflation is too high, they don't care about the FAIT framework. It was just a manipulation tool they used to give us the impression that they cared about inflation, telling us one thing while deliberately meaning the complete opposite. And what's worse is that by the Fed basically saying they don't care about FAIT anymore, it means that even if they start cutting rates later this year, it's going to take a lot longer than the markets anticipated to get back to lower interest rate levels that support interest rate sensitive stocks and assets. And this is really strange when looking historically at the Fed's behavior during election years, as all the politicians in office that are up for re-election, regardless of their political party affiliation, want the markets rocking and rolling. Because historically, most people decide on who they are going to vote for by spring of the election year, around this time. Yet the Fed isn't budging. So here's a couple funny things. 1, some of the politicians are outright trying to give the impression that the US economy is doing great, and that, all things considered, everyone, all of them, have been doing a great job. This is about a 4-minute clip of this dude trying to sell himself, sell the Fed, and gas up the rest of Congress despite the state of the US being not great. Listen to this guy, it's wild.
That by most accounts, our economy is doing well. In fact, I would say our economy is doing better than most of the other countries in the world. Would you say that's correct?
I would.
And so, I would say then that some of the other countries of the world maybe should have looked at the policies that we put in place thereafter so that they could get out of it, so that they could have a labor market that is strong, where the unemployment rate is near a 50-year low. And as you stated, inflation is also now coming down faster than any place else on the planet, just about. Is that not correct?
I think that's right, yeah.
And I think that you also recognize a mismatch between the strength of the economy, that's what we're talking about, in the field. And I think that Ranking Member Waters touched on one of those big issues of housing, which is now, we're still trying to get that under control. And I think the Ranking Member has some ideas on how we can do that, and that may be something that you need to consider so that we can further get down the inflation rate. And the other would be the commodity markets, because the cost of food is too high in people. So that's something else that we need to get in control. Is that not correct?
Yes.
And let me just ask this, can you say that there's a connection, for example, between conflicts in other areas of the world, like Russia's war against Ukraine and or the turmoil in the Middle East and the economic pressures that the United States feels? Does that not also go into the reason why the cost of commodities can be still higher? Is there a connection therein, Mr. Chairman?
Certainly the war in Ukraine caused commodity prices to move up sharply.
So could you tell you what is the, what would the connection lead you to believe that there is an urgent need for us, I would think, for, when we're running out of time, for us to do everything that is in our power in Congress to support Ukraine, so that we can make sure that and other strategic partners, that we can help the commodities market, and that would help lower the cost of some of the commodities, bringing food prices down, if we would just be able to pass certain things that's going to help Ukraine right here in the United States Congress. Is that correct?
Here's where it gets outside of our jurisdiction. So I wouldn't have an opinion on Ukraine funding.
But if we had more grain that was going through, it wasn't blocked by Russia, things of that nature, that generally just, say that helps bring the cost down. Cost is higher because of the disruption in the Black Sea that's happened because of this war. So that would help bring the cost down. That is not necessarily the policies just here in the United States, but that's the policy because of what's going on in Russia. And we need to make sure that we do something to prevent that if we really are serious about bringing inflation down. Is that not correct?
I think it's correct that a full supply of grain would help with commodity prices.
And so, instead of us playing politics with this and acting like it is your fault or anyone else's fault that we had to go and do what we did because of the unprecedented pandemic, what we did was save the economy then, knowing we got some problems that we had now, and now we're recovering quicker and better than any other country on this planet as a result of your policies and the policies of Joe Biden.
Yeah, clearly all of that was about trying to get reelected. He even pretty much said that printing money to give to Ukraine will decrease inflation because it will decrease the cost of grain and other commodities. How much time and money does he really think it would take to get close to a resolution that would actually have a real effect on inflation in the US? I mean, as we discussed the other day, our national debt is increasing by $1 trillion every 100 days and will continue to compound faster and faster. Solution? Print more, send it overseas. Let me know if this logic makes sense to you in the comments below. I'm going to spare all of us the pain of listening to more bought and paid for politicians basically rambling and reading off pieces of paper given to them by lobbyists before going into the meeting. So here's what we need to be aware of. So with this FAIT fake out and this endless debt spiral, this just gives us more proof that the private central banks, the Fed, likely have a plan in place to systematically destroy the current financial system by centralizing the banking system to just a few large banks, to then implement and enforce the use of a CBDC or central bank digital currency they completely control. And we can learn more all about that in this video guide by clicking on the link above. Cool. Another thing we need to be aware of that was discussed during Powell's testimony was about Scott Reckler's white paper, which was posted on Fortune, calling for over 500 more bank failures with a doom loop ahead of us, paying in a slow-moving train wreck as waves of commercial real estate loans mature over the next few years. He says this commercial real estate problem is the equivalent of the residential housing problem we saw in the 2008 recession. So when asked about it, Jerome Powell said, "We think the commercial real estate sector is manageable. Everything is manageable here. This is fine." And literally as he's pretty much saying the banking system is stable, resilient, and everything is fine, New York Community Bank came out saying, "Hey guys, we're broke, our bank is failing, so we need to raise some money ASAP on the stock market." And the stock market pretty much said, "Bye Felicia," which sent its stock into an absolute free fall until trading was halted for it. Great. Other things that were brought up throughout Powell's testimony had to do with Basel III, which has to do with banking regulations, which would make it a lot harder for many banks to continue operating, as only big banks would be able to implement the new tighter restrictions on the horizon. Many congresspeople actually voiced concerns about this, citing how it would consolidate the banking system, give less people access to banking and capital, and how big banks were given a whole couple of years worth of heads up to get ready for regulatory changes that smaller banks are just now hearing about. Again, simply looking like this is all going according to the Fed's plan. Bearish for banks, bullish for Bitcoin, decentralized finance, cryptocurrencies, and Web3, where we don't have to rely on third parties like banks. Nice. And the last bit of information we need to be aware of is with higher CPI readings from January, the high jobs report from January, higher jobs reports that came in this past Wednesday morning, low unemployment, GDP increasing. Considering all of these factors, we likely won't start seeing rate cuts until much later in the year, like Q3. And although Jerome Powell did suggest we may see up to 3 rate cuts in 2024, he highlighted the fact that assumption was based on old December 2023 data, and the next batch of data they will consider will be out on March 20th. March 20th is also when the next FOMC, or Federal Open Market Committee meeting is, where they will probably announce keeping interest rates at the same as they are now. And it's possible instead of getting 3 rate cuts this year, we actually only get 2. Unless something super bad happens, like, I don't know, over 500 banks collapsing. But that was probably their whole plan anyways, right? Mission accomplished, almost. In the meantime, let's make sure we are receiving our fair share of our own income back from the government this tax season. Check out how simple and easy it is to get our crypto taxes done with CoinLedger and their 3-step process. First, we are going to import our transaction activities from all exchanges and wallets we have been using, like Coinbase, Kraken, MetaMask, Tangent Wallet, or similar, with a simple click of a button. Second, CoinLedger will automatically classify our transaction history into the appropriate tax treatment, calculating our gains and losses for all transactions, whether it's from trading, staking, NFTs, or anything else. Then finally, the third step, once we've reviewed everything, we can download our tax report with a simple click of a button. And before even paying to download the tax report, we can view our capital gains and income for free, identify tax loss harvesting opportunities across our portfolio for free, and get help from their support team to review any data we need guidance on. So we can use the platform for free, and we only have to pay if we want to download our digital asset tax reports, which comes with a 14-day money-back guarantee. And we get the tax forms we need instantly to file ourselves, upload to TurboTax, H&R Block, or similar, or hand off to an accountant like I do with my CPA Lorenzo. Straightforward, easy, safe, and stress-free. So scroll down and use links below to access CoinLedger's correct and official site, as well as redeem any special offers they have for us. Awesome. If you would like to increase your chances of making gains by buying and selling altcoins at the right time using the money line, check out this video. If you would like to learn the best proven strategy in crypto, which is how to DCA or dollar cost average into the crypto markets, check out this video. And to get your very own Tangent wallet, click on the link on the screen. Like and subscribe for more. Be safe out there.